So I have been talking about this a lot, that I do trade all the time frames, and most people ask me, how do you trade all the time frames, right? It's, I wouldn't say it's easy, but I think it gives you a lot of insight on what is going on a particular instrument. So it depends on what I'm doing. If I'm day trading, I have specific instrument that I am specific time frames that I'm looking at. But if I am doing a general analysis on an instrument, planning what kind of trades I'll be looking to take on that instrument, then I'm looking at all the time frames. So all the time frames can literally be any time frame, but these are the ones that I'm literally looking at. So you can see here, it starts all the way from the 12 months time frame. So that is a year. So every candle is 1 year. This is like very long term trading. Like if you want to do like very long term swinging and also do some form of position trading or hold your trades for extremely long, right? But if I'm starting to analyze a pair for a look at all the very potential scenarios to be looking at on that instrument, then I would pay attention to all the time frames. So let's say gold is fresh, right? I am here to talk about gold. I'm doing a general overview of what gold is. I'll start from the 12 months time frame. Basically, I'm not really looking for any complicated things. Like I'm not going to be doing so much on the 12-hour time frame. I just need to pay attention to certain kind of levels. So for instance, here on gold, we can see that gold has been pushing up over the years, like from the 2002, gold has been pushing up, and back in 2012 we created a high, and 2013, 2014, 2015 we had a push to the downside, and then from there gold has been pushing up. So this is important. So this is a high level point. So this point here, 1.18303, is an important price for gold, right? Because this is where we took out this high here, right? The next thing I'll keep an eye on is I want to know what is the high of last year. So the high of 2023 is this level here. That is something to keep an eye on, right? And that is something to keep an eye on. And another thing I would keep an eye on would be the low of the year. So where did the year start, right? So some people can label this. You can label it how you want it, but I'm not really that fancy writing on my charts and all that, and I delete my chart a lot. So writing on it won't really make a lot of sense because I'll spend time writing on it and I might end up deleting it, right? And then on the 6 month time frame, the same thing, right? On the 6 month time frame, I don't really see any much difference because the high of the year is also the high of the 6 month time frame, and the low of the year is also the low of the high of the previous year is the same thing. The levels are the same. So I'm not doing anything here. I literally skip to the 3 months time frame. So the 3 months time frame, if I am looking at this for the first time, this is a zone I'll keep an eye on, because this zone I trade demand and supply as part of the strategies I look at, and this is a demand zone. Price tapped into it and it pushed to the upside. So if this had not happened in the past, this is something I would have looked at, right? And then I look at the monthly time frame. So here on the monthly, I'm basically looking for demand and supply zone, because this is a 6 months, a 3 months demand zone. I'm not looking for anything below, because for price to break below, it needs to first go here. So I'll look at here, this level here. Is there anything that I need to keep an eye on? I don't see anything. So in that case, I go to the 2 weeks time frame, look for some levels to keep an eye on. So looking on the 2 weeks time frame, I see a very big demand zone sitting here. On the weekly time frame, I don't spot any levels here. There's a level here, but that is hidden inside the 3 months, so I won't really bother myself. So the current level I'll need to focus on is this 2 week level that is sitting here. Then I'll go to the daily time frame. So this is where I'll start picking trades. So everything that I've done so far is just to familiarize myself with the environment I'm dealing with. I know that this is a very important high that the price broke all the way from 2012, and this is the low of the year. So this is literally the low of the year. So you can see this is January, around February. So the low of the year, December 23rd. So this is the lowest point for 2024. This is the low of the year. So I'm interested in that. And this level here is the high of the previous year. So the low of the year, price broke it, created a low, and we've been pushing up. So that is all the information I picked from the higher time frame. From here onwards, I'm only interested in the price action, the market structure, and demand and supply levels, right? So the daily time frame is very important. So am I seeing any levels that are of important here? So here on the daily time frame, what do I see? I see a very nice head and shoulders pattern, right? Very clean one. So see, looking at this on the daily time frame, this is telling me that gold could be pushing down, right? So if gold is pushing down, there are so many ways I can trade this, but looking at the current structure we have here, you can just connect a trend line like this, and you can see that we've broken this level and we are currently testing it. So which means that coming next week on the daily time frame, let's say we get a rejection here, we could get a nice sell going all the way back into this level here. So this is thousand, almost 1,200 pips, almost 1,200 pips on gold, right? Which is very important, like very significant. I mean, very significant, right? Or I could use my fib fan here. So according to the fib fan, we've not really broken. We are currently still sitting here, so you need to wait for the break of the decision line, and in that case it means that your TP is somewhere below the zone, which means there will be some reaction here, pullback before we get here. So this is still valid, and long term I would use the fan as my target, but I don't want to get things complicated. Let's keep it simple. So on the daily time frame, this is why I start spotting things like market structure, and also to note that there's a supply zone sitting here, which means technically long term, if you're a swing trader, your stop loss is above here because you don't want price going past here. So this price here can continue pushing up, but it's most likely not going to go past this, and then from there we look for a sell here, which will be about 1,500 pips because of the push to the upside. And then I go to the 16-hour time frame. I'm looking for the same thing. So on the 16-hour time frame, what I just spotted on the 16-hour time frame is confirming that price is actually going to go into this zone, because we have a demand zone sitting here, right? And I'll just, at this point, I'll just keep scanning the time frames to see if there's anything that catches my eye, because I already have a bias that price is going to continue pushing into this zone, which is from current price is going to push 200 pips. No, I think it's more. Hold on. Yeah, about 240 pips into the zone. So I already have a bias. So in this case, I'll just quickly scan through the time frames to see if anything else catches my eye, right? So I go to the 12-hour time frame, nothing different. 11-hour, I don't really see anything different. Let me take this trend line away. 10 hours, nothing different. It's just that it's showing us that price came into this demand zone, and that's why we have the pump to the upside here. We have 9-hour, nothing. So on the 8-hour, the zone is getting finer. So instead of taking profit here, I would go a little bit higher into the zone, because the 8-hour zone is getting finer, and the 7 hours, the zone is this, the 8-hour zone is the same as the 7-hour zone. 6 hours, some of these zones I'm mentioning won't make sense to you if you don't understand what I trade, but just to give you an idea how I use all the time frames. Yes, so there's a confluence with the 5-hour zone, 4-hour zone, 3-hour zone, and the 2-hour zone, right? So based on this, gold is a buy. Like it's just straightforward for me. So on the 2-hour time frame here, if the market was not closed, this is a straight up buy. I'll go in for a buy from current price, and the stop loss would be at the low, but if I'm going all the way here into this line here, that is 1:3, 3.5 risk reward ratio. I always like to give my stop loss some room to breathe. So in this case, I would push my stop loss down a little bit to give like 1:3 risk reward ratio, right? So this is okay for me, right? Just to give some price room. So gold, if you see this, when the market opens, buy gold and catch 360 pips, right? So that is how I use all the time frames to give me a bias and a trade idea, right? This is mainly when I'm looking at demand and supply, but I look at other things depending on the market structure. So if I've done all this and I don't find any significant trade, then I go and use other approaches to try and understand what is happening on the market. So I hope you enjoyed this video and see you in the next one.